Hello and welcome to TA for Traders. It's Friday the 12th of January. In this short video we'll be looking at the technicals, looking at the charts on the Dow Jones Industrial Average, which has the code DJII, or on TradingView is best viewed using US 30 USD. What we'll see is very much or very similar to the S&P that we covered on Monday. TTYF. The trend is your friend. You stay with it as long as we're in this solid uptrend. There's good upside momentum. However, we are at the upper boundary of that trend, but a consolidation would be healthy. Let's look at those charts. So we're starting with the weekly. So each candle on this chart represents 1 week's trade. And you can see that we are quite overextended away from the moving averages. The 20 week is at 23,517, so we are 2,100 points above there, quite overextended. All the moving averages are moving up, so they will be supportive if we get any consolidation. You can see that the momentum on this longer term chart is very positive. The RSI is at 88.84, obviously slightly overbought, and the MACD are well above zero. I mean, the short term is at 953, an all-time high. That's indicative of the positive momentum, but again, it is slightly overbought. Moving on to the daily picture, and actually it's a similar story. It was very positive that we got a push up from the 20-day moving average, both in November and then on the slight consolidation that occurred just over the Christmas period, and then at the start of the year we bounced up from that 20-day. So that's all positive. Again, the RSI is above 80. 84.86, and I would suggest again that it's overbought. There's not been a non-confirmation. We are going to a new high on the RSI, on the new high on the Dow, so that's positive, but it is slightly overbought. MACD short term still above the longer term, but at high levels, so still indicative of that positive momentum, but again slightly overbought. On the 4-hour picture, again positive that we've had bounces from the moving averages. This one at the start of the year when the 20 and the 50 were together, and then on the 10th of Jan we again bounced from the 20 from this 4-hour chart. We're slightly overextended at the moment, and realistically some kind of consolidation should be expected to let that 20 from this 4-hour catch up. That will be the first support level, which presently 25,402. RSI, what did create a slight downtrend, never went anywhere near the 50 level, bounced back up, broke the downtrend, again above 80, 81.12. Here there is a chance that we're going to get a non-confirmation. Obviously we're not at the peak yet, so we can't say if it's going to occur, but just keep your eye that if we do get a consolidation, that the RSI isn't as high as it was on the 7th of Jan, so we could see the signs of a non-confirmation. MACD moving back upwards again indicative of the positive momentum. Looking at the support and resistance levels on the Dow, resistance 25,658.8. Then, as I said, first support at the 20 from the 4-hour, which is 25,402.2. Then at 25,172.16, which is the 50 from the 4-hour. So that's been TA for traders looking at the Dow Jones, US 30 USD. The key takeaways are that, of course, TTYF, the trend is your friend and it remains your friend. Stay with stay with the Dow as long as it remains in the trend. I've missed out a letter on the next bullet point. We're at the upper boundary of that trend. Be aware of that. RSI, MACD, all indicative of upside momentum. However, they are showing a slightly overbought market. Any consolidations will be limited by those rising moving averages, but I must say that we do expect a consolidation shortly. But as I said, it should be limited with those moving averages. Anyway, thanks for watching this video. Please remember these videos are for information only, and in my opinion, they are not an investment recommendation.